Okay. A very good evening, everyone. Thank you for joining us for our webinar today, where we'll be talking about the countdown to the US presidential elections on November 5th. Right, today, Jeddave, our technical analyst, and myself, Billy Zhou, Regional Head of Retail Research, we will be talking about these two key factors, the US presidential election, as well as the Fed rate cuts that a lot of people have been looking into, right? But before I start, let us just quickly go through some of the boring stuff. I think this is just a disclaimer to tell you that this webinar is not really a recommendation for buy and sell. It's basically for you to for an awareness and as well as education for our for our retail clients. And before we start, I also wanted to share some of the campaigns that we have. If you are trading in the US market right now, you can get up to $100 cash back on US trades. So as you can see here, there's tier 1, tier 2, and tier 3. For tier 1, you can get up to $20. Tier 2, you can get up to 50, and tier 3, you can get up to 100 cashback rewards with 10 or more trades to qualify. Now, at the same time, we are also offering an interest-free margin financing, which is enjoying 5 days interest-free period when you execute US buy trade via your margin trading account. So for those of you who wanted to find out more about it, you can go to our website to click on to find out more our terms and conditions, right? Okay, now let's talk about the first thing. I think yes, the US presidential election is about 2 weeks away. And just to give a bit of background for those of you who are not familiar with the US election. So what the polls are saying right now, if you have been following the US election, you'll probably be aware that Donald Trump is currently leading the poll for the first time since Kamala Harris entered the US presidential race. Now, prior to this, if you can see the chart here, you can see before this, Joe Biden was supposed to be the presidential candidate for the Democrats Party. But of course, some hiccup in their debate, which resulting to Biden being dropped out and replaced by Kamala Harris. Then, of course, when Kamala Harris came in, there was quite a bit of momentum for the Democrat candidate, which has seen Kamala Harris taking the lead over President Trump for a while. But of course, the polls that we are seeing here could be underestimating Trump again, as they did in swing states during the 2016 and 2020 elections. For those of you who forgot about it, during the 2016 and 2020 elections, a lot of the polls have underestimated Trump win, and even the results in 2020 where Trump lost to Biden was closer than expected. Of course, there is also the possibility that pollsters might have overcorrected their previous bias, resulting in an error that could underestimate the Democrats Party. So we simply wouldn't know until the votes are counted. But what is the odd or the betting companies are telling us? So this is basically the betting odds on the internet in US. Now, bear in mind the betting odds have been correct over the last since 1866. In fact, they've only lost twice, right? So let's just look at the odds that says that Donald Trump is likely to win at a 60% compared to Kamala Harris. So it's quite close. And Kamala Harris actually led the betting odds prior to October. Sorry, at the beginning of October, but Trump actually overtook it in the second week, signaling a significant shift in momentum. If you've been following the US election campaign, then you would know that Elon Musk has campaigned strongly for the president, Trump, for a while. If you look at Twitter, you can see a lot of campaign, a lot of talks on that front. But of course, the Democrat Party candidate has the support of quite a bit of Hollywood support there. I think a lot of the celebrities actually supported her. Right. So what are the key difference in terms of policies, right? Jeddave, just wanted to ask you, when you look at Trump and Kamala Harris over the last, in terms of their campaign, what are some of the things that you've seen in terms of that strike most for you in terms of the two-party candidate?
Yeah, okay. So thanks, Billy. Okay, hi. So everyone, hi everyone, I'm Jeddave. Okay, so just to quickly share a little bit, right? I think one of the most stark policy difference that we can really tell, right, is that I think Trump is definitely more on the inverted comma protectionism kind of trade, right? Which means that he's going to really try to heavily favor US industries. He's going to try to keep manufacturing back to US, right? He's going to try to protect US manufacturing. And I think a lot of that is going to be seen in and heard probably right, with things like with things like tariffs and things like that. He's going to probably try to hurt the other companies that are trying to come in and manufacture in the US. I think the other side of it is that I think some of the things that Harris is really trying to run on is things like your 25K in terms of the home loans, right? The forgivable home loans. Another thing that Harris is trying to talk about is also things like your sorry, the word is lost on me, but effectively your unrealized gains tax, right? I think that's something that Harris is really trying to push as well. So I think though some of the things that Trump will be pushing is more on the tax cuts and things like that. Harris will be probably more on the unrealized gains taxes and things like that, and more on the taxes on the rich and so on and so forth. So I think policy differences, I think that's the biggest difference I'll see within both of them in terms of how it will affect the market. Yeah.
Thanks, Jeddave. I think for those who are joining us for the first time, I forgot to mention this. If you have any questions, just feel free to type it on the chat or the Q&A box. We'll answer along the way. So this is not the usual webinar where we just share the entire presentation. It's more a conversation between myself and Jeddave and with you guys. If you have any questions that you want to ask about the US elections or even about stock picks and all that, feel free to be in the box. If you can answer, we will answer you. If we do not have an answer for you, we will tell you, we'll let you know. Because we don't know everything for sure, right? Okay, I think, yeah, Judith, on your point, I think the two key differences, I mean, is that Trump probably look into tax subsidies, tax cuts, and even tariffs. But if you look at what the Joe Biden administration has been doing, which is probably what Kamala Harris will be doing if she's to be the president, is a lot of a lot of incentives are being provided, like the CHIPS Act, a lot of in terms of monetary that has been given. It's a totally different way as compared to Trump, I guess. One is looking at tax subsidies, tax cuts. Another is looking at giving money through certain incentives, or I think even like the debt. I think the student loan that has been exempted for students, right? So a lot of different approach in terms of how both Trump and the Biden administration has been doing. So you look at part of the reason, I think if you've been watching the campaign closely, one of the things that a lot of at least those Americans commentaries were that the inflationary pressures that we've been seeing in the United States are partly due to the fiscal stimulus or the fiscal measures that have been introduced by the Biden administration. Right. I just wanted to share this. I think just now they asked for the slide. I think I've actually prepared the slide on this portion, which shows some of the key difference in terms of policies between the Trump administration and Kamala Harris. So if you look at Donald Trump is likely to focus on fossil fuel. So he's been talking about fossil fuel industries, and he is likely to roll back some of the regulations and expand drilling permits, while Kamala Harris will likely to focus on climate change and renewable energy, emphasizing on investment in renewables such as solar technology and EV support. So this becomes very interesting, right? Because I think one of the biggest supporters of Trump is Elon Musk, which actually runs Tesla, which is an EV operator. So, but of course, comparatively, I think the Kamala Harris administration is likely to push more for EV support rather than the Trump administration. Then, of course, the second thing, I think this is something that I personally like, is the financial deregulation. I think Trump will likely to continue to ease on regulatory burdens on banks by rolling back some of the regulatory requirements. So this is likely to boost some of the M&A activities, as compared to the Kamala Harris is likely to emphasize a lot on consumer protection, which will result in tighter financial regulation, which could challenge bank profitability. I think it's not just the banking industry, actually. If you look at even the tech industry, like a lot of actually a lot of checks were being made on, I think even on Google recently, that talk about potentially separating some of the subsidiaries of the Alphabet to split them off. So these are some of the path that are taken in terms of the different direction in terms of what Donald Trump and the Kamala Harris administration is likely to do. Then, of course, the last one is probably on the industrial trade, tariff versus domestic innovation. So Trump has actually said that tariff is one of the most beautiful words in the dictionary. So he actually challenged, I think there was an interview with Bloomberg that he actually challenged Bloomberg directly, saying that tariff will be effective to drive economy back to the United States. But from what I'm hearing, I hear a lot of threats of tariff rather than just the implementation of tariffs. But it's likely to be implemented against the likes of China and potentially EU as well, which was mentioned a couple of times, to protect the domestic industry. So basically, in a nutshell, Trump's focus is on, if you want to export stuff to the United States, you make sure you manufacture it in the United States, right? So that's basically the idea of it. So Kamala Harris is likely to go for a slightly different direction. If you look at Joe Biden administration, they've actually kept quite a bit of the tariffs that Trump has introduced against China, but I think there will be a lot more focus on investment in high tech and green tech sectors. I think there will also be a lot of sanctions against some of the exports to countries like China, or I think even expanding to countries like in the Middle East, especially on chips that have to do with artificial intelligence. So you can see policies like the CHIPS Act will continue to be introduced if Kamala Harris were to win. So these are basically some of the key differences. All right. Before I go to the stocks that could benefit from Trump's election win, is there any questions? Let me see. All right, there isn't. Jeddave, just a quick one on you. In your opinion, right? I mean, I'm just wondering. I mean, if you've heard quite a bit of both the Trump and Kamala Harris talking about, I think tariff is probably one of the things that will be continue, right, against China. Either party wins. Do you think so?
I actually do really agree with that statement that you just made, because I think if Biden and Harris, I think the main point and main argument that I think we will just want to really focus on now, right, is that I don't think Kamala is going to be a very different president from Biden, right? So we have already seen what the Biden policy is going to roughly look like. I think the question is, if she's going to propose that she's going to change things, then the question will be, why hasn't she really done it? And the likelihood is that it's still going to be the rough same track. So I think if since the China tariffs are still being held, I think in all likelihood, if she's going to be elected, it's still going to be upheld. It's not going to change any much, right? I think for me, right, the thing I'm going to really focus on, I think the thing I dial in most on, right, is really the threats of like the increased taxes, right? I think that's going to be one of my big focuses when I talk about the Kamala versus Trump kind of comparison, right? I think in all, right, I don't think the election will really shake the markets out too negatively, in the sense that I think in the longer run, there shouldn't be too big an impact on the markets. But I think that is only going to hold true if the thing about the unrealized gains taxes don't really play out, right? Which I think that's something that not a lot of people really know what kind of impact it will be. And I don't think many of us will actually want to predict what kind of impact it will have, right? But I really do feel that if you're talking about the longer term, if you talk about having that being pushed forward, even if you talk about it only being for the inverted comma ultra rich, which is what she always likes to say, right? You're going to likely see that it's going to impact in the ways that people who hold the stocks will have to sell stocks. When they have to sell stocks, right, you're going to have to see that the markets are going to have to recorrect themselves, right? And I think there's going to be a lot of revaluation changes and things like that take place around unrealized gains taxes. So I think that would be one of the main things if you're talking about Harris trade, I really want to pay attention to. Be very, very watchful of that, I think. Yeah.
Okay. Sorry, Judith, do you have that chart before that you showed like how the volatility is like just prior to the election and after?
Sorry, I'm not really sure what chart is that actually. Volatility, is it?
Stock, not volatility, I think the stock performance just prior to the
Oh, the seasonality one, is it?
so you the one that I think you
Yeah.
showed recently for
I
those
think
that
I showed the seasonality chart before. Yeah, let me just get it up. Give me a short while. Yeah, but okay, effectively, I think what I think I was sharing with people before, right, is generally speaking, there is a take that seasonality tends to for in the US market, especially when you look at the S&P 500, right? You talk about over the past many years of election, right? Okay, at least just elections going back into 2004, right? Let's say, right? Generally speaking, the US markets tend to have a very strong underperformance in your October period, right? But after your September, October weakness, your November, December post-election tends to have a bit of a rally. And I think this is the chart I'm talking about. Yeah. So if you should look at my screen now, I think this is wait, sorry. If you do see my screen now, I think you guys can see it, right? Yeah. Okay, so this is a seasonality chart, right? So what I mean by this seasonality chart is what this tells you is generally over the past 5 election cycles prior to not considering this year, past 5 election cycles, you can see that September, October really ended weakness, and you can see very, very heavy weakness in October, right? 20% of the time, October ends stronger than it started, right? And the average performance of October, right, over the past 5 election cycles about minus 4.4%, right? But if you look at November, right, it actually has a very, very strong performance, right? 80% of the time you end of November higher than you started. The average performance was 2.2%, and December is a very, very strong month for the post-election period as well. So I think generally, right, the markets are just very touchy, right, when it comes to, uncertainty and things like that. I think the build up to the election, there's always, or there tends to be a higher chance of a sell-off than not, right? But after that, right, I think the markets tend to pick back up, people know what to expect, and the markets start to just re-enter again. There's a bit of a holiday trade that comes in. Generally, seasonality towards the end of the year is strong. So, I mean, these things tend to play out, right? And I think I don't expect anything different for this year as well. Whoever is elected and whatever the case of the election will be. Yeah.
will look a bit different, right, Jeddave, this year because we have a very strong September and October, right?
Yeah, but I think that's the interesting bit, right? Because you have a very September, October is weak, right? But normally weak, but this year was very strong. But I think the difference in this year compared to the yesteryears, right, is that we are in a very unique cycle of there's the possibility of rate cuts and things like that that's coming to play as well, right? And of course, the economy is for now flagging a lot of strength, right? And so there's a very weird balance, right, whereby the markets are kind of trying to preempt a soft landing, right? Trying to say that, there's a likely soft landing coming, rate cuts are coming. When rate cuts are coming, you have to price in these things into the valuations, right? So stock valuations become a bit more attractive. People start to buy into stocks, then you start to see a picking up in terms of your strength in the markets, even though, right, when you look at it on a wider basis, seasonality is weak, right? And Q3 technically tends to be pretty weak, right? But if you don't mind me jumping a little bit into earnings, Billy, right? Actually, this week is actually a very big week for earnings as well. So I think while we are towards the end of October, and October is actually still pretty strong for now, right? Or at least still show some signs of strength. I think we cannot discount that there's going to be a lot of volatility over the next 2 weeks. Now, this week itself, right? I think there's going to be about 20% of your S&P 500 names reporting earnings. Not outside of your Magnificent Seven, right? Your Magnificent Seven of that, right? There's going to be Tesla that reports earnings, right? But outside of that, there are about 20% of the S&P 500 companies reporting earnings. Next week, right, you have the next 5 Magnificent Seven companies reporting earnings. So that constitutes your Apple, Alphabet, your Meta, your Microsoft, and your Amazon, right? So when these 5 companies are going to report earnings next week, their weightage, your cap weightage is about 20% as well. Very big. So this next 2 weeks, right, is I think likely going to be over 50% of cap weightage in a sense, right? That's going to report earnings in the S&P 500, and that's going to really be able to swing the market very wildly, even either to the upside or downside. So I think the expectations for the tech earnings are actually generally good, right? Your Magnificent Seven is all expected to report earnings pretty well, right? And a lot of it is led by your biggest company, which is Nvidia, right? And so that's going to be the one that really continues to push earnings higher. But take those big companies, these big tech companies away, right? Generally speaking, your earnings is actually not that positive, So I think according to FactSet, right, if you look at your earnings contributions, right, the expected Magnificent Seven earnings are right, it's expected to be about 18.1% for earnings growth year on year, right? And the overall blended for S&P 500 is about 3.4%, right? But if you talk about outside of these Magnificent Seven names, which is the 493 companies, right? Your earnings growth is only about 0.1%. So Q3 is generally quite a weak season for earnings, right? And I think I do expect this kind of weaker earnings to kind of play out, but you have to see whether there's going to be a bit of a supportive narrative coming in from all your AI tailwinds and so on, right? And a lot of that will again be led by your Magnificent Seven. And if they do come out positively, right, I think that could provide a little bit of a balance. I think October is very much on track to buck the trend if that's the case. Yeah. But I wouldn't say that we are definitely in that region yet. Yeah.
Jeddave, just to add on this, in that case, I guess the expectations are low, right? So in a way, it's easier for companies to actually beat expectations, right? I mean, outside of the Magnificent Seven, especially.
Yeah, actually, I mean, to a certain degree, you're kind of right in saying that. But I think we also cannot forego the fact that, even if the expectations are not high, there's still a chance for companies to miss their expectations, which over the years, right, we have seen that it's not just the expectations that are important, right, but it's the forecasting and things like that as well. And so as companies look forward to what is coming up next and so on and so forth, right, I think that's going to be a very important point to really take note. And yes, I think you're showing the slide right now, right, Billy? I think that's a very important thing to take note as well, isn't it? That I think actually earnings is going to be a bigger point of valuation, right? A lot more so than your things like your election or anything else. Yeah.
I just want to show this because I saw that a lot of the investors are actually looking at earnings as a key priority in terms of their stock trade and their investment decision as compared to US election and the Fed rate cut. So probably something for investors to take note of. Now, having said this, I do wanted to emphasize that the importance of following some of the latest developments such as the US election. I mean, if you look at the latest market, right, the Trump trade actually has went up quite a fair bit. Trump trade as in companies they're expected to do well if Trump were to win. So I'll just give an example. If you look at Bitcoin, it has actually rallied to close to 69,000. And I think that happens along in line with pretty much when the news on Trump poll overtaking Kamala Harris, as well as some of the betting odds that we have seen. So those are some of the things that investors can take advantage of, in terms of positioning. So which brings us to our next slide, where we will be talking as some of the winners if Trump were to win the election. Right, so let's start with the traditional energy and oil. I think this is definitely one of those. So ExxonMobil and Chevron, as well as the other large oil companies, are, of course, expect to benefit from Trump's emphasis on the regulation and support for fossil fuel industries. In fact, if you look at the first turn that Donald Trump did, I think actually he also actually did roll back on some of the regulation against the oil and gas players, especially the drilling players. Jeddave, do you mind share some of the charts on Exxon and yeah.
Sure. You give me a second. Yeah. Okay, so I think if you talk about Exxon and Chevron now, right, I think the first thing we need to really be watchful of is oil prices now, right? Because oil prices have really been very, very volatile in this period of time now, right? And so for companies like Exxon and your Chevron, for example, right, all your natural gas, oil prices and things like that are really going to be important measures to really take note or see whether the stock can continue its rally, right? For Exxon itself, actually, there was a pretty nice positive breakout, right, above this kind of like extension level, right? And it's a pretty important major resistance level. You can see it's right around the bound of all-time highs, right? And breaking out from there is actually a pretty nice positive. But then you also can see that there's a little bit of a pullback after that, right? And this coincides with oil prices actually really, really weakening in this period of time. And a lot of that is because of, China demand being weak and so on and so forth, right? I think so that is really, really weak on the markets, alongside the fact that I think Middle East, the developments is not really that much towards the negative side for now, right? And I think that's still something to really watch out for. So I think generally speaking, for ExxonMobil, I think one of the positive things is that you have broken out nicely, right? And for now, you still hold this support level. And I think as long as you hold this initial support levels, right, I think for this breakout, the likelihood is of a stronger uptrend is still there, right? And I think I'm also seeing RSI in a more bullish zone now, right? So I think these are things to me that does flag positively for something like Exxon, despite the fact that I think energy has not been the best performer over the past 3 weeks or so. Yeah.
Yep.
I think Chevron itself, right, I think the one that I'm a bit worried about is that you are seeing a stalling right around the 200-day moving average, right? So I think until we see a breakout from there, I think I'm going to be a bit more cautious on Chevron. I think Exxon will be a better pick if you're talking about just purely technicals, right? But if you're looking at something like Chevron, I think the point of entry will be if it does manage to break above this 200-day moving average. And I think earnings is also in a few days' time. So I think if it does manage to break above the 200-day moving average and so on, right, I think the next point of this prior swing highs, right, which is actually a pretty major kind of resistance level as well, right, I think it's going to be the next bound to really watch out for, around the 170 mark. Yeah.
Okay, thanks for that.
Yeah.
Let me just screen. Okay, then aside from the oil and gas, I think defense and aerospace is another area to watch. I think they also actually benefited from the current geopolitical tension that is ongoing. So the likes of Lockheed Martin, Northrop Grumman, I think they've been doing pretty well. I haven't been following their share prices, but I think I wrote about them about 2 years plus ago when the Ukraine and Russia conflict first started. So I do think that some of these companies do benefit from in terms of their resilience as well as the benefit. I think well, one of the things that I really dislike about companies like this is the level of debt that they incurred. It's pretty on the high side. But I think one thing to take note of is that these companies are likely to be protected in a sense because of the technologies that they own. So it's like unlikely the government will allow them to fail per se. So sorry, Jeddave, do you mind sharing some of the technicals and the trend over the last 1 year?
Yeah, I think for the technicals for these three companies, I think I think I can largely focus a little bit more on, I think, the one that is probably the strongest trending. I think one of the strongest trending names are right. Actually, RTX is actually one of the stronger trending ones versus the other two, right? Yes, I think Lockheed Martin is definitely the biggest name in terms of the name people know the most, right? But I think for Lockheed Martin, I think very clearly one of the things I'm very worried about, right, which is why I'm not very keen on the technicals for now, is that there's a bit of a bearish divergence setup that's going on. So you can really see that there's a lower high in terms of your momentum, but the higher high in terms of a price, right? So as much as it's continuing a bit of a rally, I think that is something to remain a bit concerned about, right? I think you have a bit of a slightly similar look in something like your RTX, right? But I think why I'm a bit more positive on RTX is just because on the fact that there are some that it has recently just reported earnings and it's pretty positive, right? And I think that's why you still see the share price pretty supported. And with that being said, right, if it still remains supported post earnings, I think my expectation is that, like this gap support here, likely even if there's going to be a bit of a short-term pullback, will likely hold. And I think that sets RTX up for potentially another leg higher in terms of your higher highs, higher lows. It's a trending name that has continued to trend from October 2023 . So I think this is why I pretty much prefer RTX right. I think for something like Lockheed Martin, you still have to bear some you have to be a bit cautious given that earnings is still to come, and I think again the bearish divergence setup is going to be something that I'm concerned about.
Yep. Just to add on this, I think Raytheon is also the major US partner in the co-production of the major components for the Iron Dome. If you're not aware, Iron Dome is the defense system in Israel that is very well known. That I mean, if you every time you look at the news on the wall, you will see that will showcase the how the Iron Dome intercepts some of the missiles that are being sent over to Israel. So that's basically what Raytheon Tech has.
Very fascinating technology, isn't it?
Yeah, I think that's one of the key technologies that is in the market. All right, aside from the defense and the aerospace industry, I think the financial sectors are expected to benefit from it. The larger banks such as JP Morgan and Bank of America could benefit from the deregulation policies. I think the Trump administration actually relaxed several Dodd-Frank regulations during his administration, so we are likely to see some of that as compared to the Harris administration. So yeah, I think have been doing probably well, right, in terms of the recent trend.
Okay, yeah. So the if you're talking about the bank stuff, right? I think the two names actually that I actually do, there's one name I actually prefer rather than those two names, right? If you're talking about bigger banks, but I think to quickly just touch on JP Morgan to start, right? Because I think very nice rally out of the earnings, right? And the earnings rally actually sees it kind of touch all-time highs. There is a bit of weakness near that levels, right? But you can clearly see that the pattern and the trend is definitely trending higher, right? I think that is a pretty nice trending stock to really keep an eye on. I think the name that I actually prefer outside of your Bank of America is because Bank of America, you can really see that, right? There's a bit of a selling and weakness around this major resistance level, which to me technically does signal a bit of yeah, it's a bit worrisome, right? Or at least for some slight short-term weakness, I think could potentially take place. I look at Wells Fargo as a bit of a better name in terms of a name that actually is trending a bit nicer, right? So again, nice breakouts. You can see that after there are very nice earnings that actually takes it right to the region of all-time highs, but you do break out from that region, right? And I think as long as you hold the support of your kind of like near this prior swing high levels, right? I think what I said was that you can potentially test towards your prior all-time highs, right? Which is around the $66 plus region. Yeah, 66.50. Yeah, so I think there's still a bit of upside to be had. I think if you do break out from there, right? I think again, right, the move higher is pretty nice. Yeah, so I think Wells Fargo is one of the names that I'm also quite liking on technical front.
What's the support level for the two, the Wells Fargo and JP Morgan?
I think Wells Fargo, right, the support level that I'm looking at is around this $62.25-ish. Yeah, so that you can see that that's right around the prior swing high now, right? So when you break out from the prior swing high, to me, it's a support and resistance kind of basis for Wells Fargo. For JP Morgan Rise, I think I'm looking at the first extension level, which is around this 50% Fibonacci extension level. You can see that that's also a point where kind of like we see a bit of a resistance near these prior trades, right? I think in terms of the breakout, initial breakout, it was above this 50% extension level as well. Yeah. So I think the resistance for JPM is right around the current levels it's trading at, right? So I do want to see some continued follow through of upside, right? Before we actually say that, JPM actually is continuing its upside. Yeah.
Okay. Let me turn. In terms of the, sorry. So in terms of the industrial and manufacturing, I think companies like Caterpillar and the company could benefit from Trump's infrastructure spending plans and emphasis on rebuilding America's manufacturing base. I do think this is important. If you actually follow some of the campaign talks as well, the interview that the two president have, right, the two president candidates, sorry, have, right, you will notice that Trump emphasized a lot on infrastructure spending. In fact, one of the interview, he actually said that America is actually more like a developing countries than country like China, and a lot more developing need to be done in US than in China, which is true to a certain extent. I mean, if you look at the roads and the rail in US, it's probably not as well organized as in some of the countries like China. So yeah, but of course, when it comes to industry and manufacturing, I do think that a lot of emphasis is on getting companies to build in USA. So yeah, maybe how Caterpillar is doing now.
Okay, sorry, okay. Hope you guys can hear me. There's a bit of a disconnection that's going on a little bit, so I can't. There are times where I'm a bit cut off. I hope everyone can hear me clearly. Okay. So when you talk about
Are you there?
yeah, can everyone hear me? All good?
Yeah.
Okay, so when you talk about Caterpillar, right, I think it's one of the stocks that I think has actually had a very, very nice rally. And I think it's waiting for earnings in, I think, about 1 week's time as well, right? But generally speaking, Caterpillar, one positive thing is that you can see that it's broken out from a pretty nice base of, I think, prior swing highs, right? And I think after gapping higher above it, you can see that support around the region is also there, right? It's holding strong. So there's a bit of a consolidative look taking place, but I think generally the path of resistance remains higher for something like Caterpillar because very, very nice strong rally staged out from the overhead resistance. I think you're holding the prior support levels. So I think as long as you continue to hold this support level around near this $380 level, I think the likelihood for Caterpillar to continue this rally remains pretty high. Yeah. So I
What is
think,
the for
sorry?
this? What is the resistance level?
Resistance for this is of
For
course near the $400 plus
that it
level,
is
just slightly
trending.
above 400. Yeah. So I think that would be the initial
So you think
resistance.
it's better to go in before it? Okay.
Sorry, Billy, you were saying
Uh,
things better to go in before?
do you think it's better to go in before it surpass that resistance level, or to wait for it to pull back further?
I think there's two
Because
ways to
of
play this
the,
style
just
of
wondering
stocks
in
out.
terms.
Yeah, so either you wait for it to go before, you wait for it to break out from 400 and you confirm that breakout with entry, or you wait for a pullback where it's a nice support level where it continues to hold that support line, right? And then you enter at the support level. So I think for me right, I will wait up for either scenario. That means I wouldn't want to enter around current prices right. I'll either wait for it to really touch this $380 level right, which to me is a nice viable support point. And I think that to me is because there could be some potential room for still some downside before in keeping with this kind of bullishness and bullish uptrend right. If it does continue its upside and it breaks out from 400, I think that fully confirms that RSI is in a pretty positive and bullish zone now, right? I think that also does cement that entry into that is not that terrible yeah. But my preference is of course the pullback because I think the pullback creates a nice entry path. It does create a bit more room for upside. In terms of a trending stock right? So I think given that CAT to me is still in the realm of classification of a trending stock, I think a pullback is a nice way to look at it.
Okay, thanks.
Mm.
What's next? I think next is probably healthcare and pharmaceutical. I think the two will, this industry actually benefit from Trump's approach to drug pricing reforms, as compared to the Kamala Harris. I think we should probably focus on a lot more referencing pricing. I think the Trump administration is likely to reduce on that and potentially allowing drug companies to have more flexibility when it comes to pricing strategies. So I think I put two names here, Pfizer and Johnson & Johnson. I think Pfizer has a relatively difficult year. Johnson & Johnson probably did way better. So probably in terms of technical, how does the two go?
Okay, so the technicals wise, right, I think definitely not my cup of tea when it comes to looking at this style of trending names. Reason being is that for now, I think for Johnson & Johnson is definitely on a better state as much as fully agree with what you said. Because you can clearly see that while Johnson & Johnson is kind of trading in this kind of like lower highs, lower lows kind of momentum, right? You can see that you're trading around the upper bound, right? And there's somehow a consolidative look near this upper bound. You're holding supports near this upper bound as well, right? So when you're holding supports near this upper bound, you are seeing near the 50-day moving average. If that kind of holds right, I think on holding near this level, the likelihood of a breakout above this upper bound of this kind of downtrend channel remains quite likely, right? And that kind of breakout could kind of signal a bit of a change in trend. So I think Johnson & Johnson is definitely a lot of a better name versus your Pfizer, lah, right? If you're talking about just purely technicals. Yeah. I think the other side of it is also that there's a bit of an indecision that's taking place within Pfizer and Johnson & Johnson. And why I say that is that you can see RSI kind of hovering between the 40 and 60 mark. Lah. It's not breaking out from either direction yet. So I think one of the confirmations for me is if you do hold this support and you hold the 40 level and you do break out eventually alongside a move above 60, lah, right? I think all these things could really point towards a potential initial change in trend, lah, right, for something like Johnson & Johnson. Pfizer, why I'm really not liking is because you have a very, very steep downtrend from really, really COVID highs, right? And I think that was really, really very, very heavily overvaluation, right, of the company. And I think a lot of the vaccination things did not really play out very well for them. And so when you look at where it kind of netting out now, right, there is a bit of a short-term kind of like bottom being found, right? But the general longer-term trend still definitely remains towards the downside. And I think while there's a bit of an indecision kind of trade going on here as well, I think the longer term trend just keeps me quite a bit away from something like Pfizer versus Johnson & Johnson. Yeah. So I would definitely prefer Johnson & Johnson.
I think for Pfizer, from a fundamental perspective, they've been struggling a bit to get the right acquisition since their COVID magic, right? I think since then they've been struggling quite a bit. They even miss out on the obesity pill phenomena, right? Where I think Novo Nordisk is one of them that is the pharmaceutical company that developed one of the experimental. I think it fly up quite a bit. Do you have that?
Yeah, and under Wegovy. Yeah. So that one, I think the two companies, I think one of them is not two companies, sorry, but the two drugs that we are talking about. I think one of it is Wegovy, and the other one is I think it's Ozempic or something like that. Yeah. So Wegovy, if I'm not wrong, is under Novo Nordisk. Yeah, wait, let me see. Novo. Yeah, I think Wegovy is under Novo Nordisk, if I remember correctly. So definitely you can see that it's doing a lot better in terms of the trending name, lah, right? Versus your other two names. I think a lot of that you can see is really down to the success of Wegovy, lah, right? But you can also see some recent weakness because Wegovy is actually the first in terms of this weight loss drugs, right? And it really was the one that was pushing the envelope. But after Wegovy, I think there's a lot of competitors that start to come in, right? And so Ozempic, I think, is the other one that started to come into the picture. Yeah, if I'm not wrong. Yeah.
Eli also did very well, right?
Sorry?
Eli Lilly.
Oh, yeah. Eli Lilly is also another definitely good name in terms of the pharmaceutical names. You are exactly right.
The weight loss drug is like a
Wow, I can't remember the names, man.
yeah.
I'm surprised I remember Ozempic already and things like that. Okay, Eli Lilly wise, definitely in terms of trending name as well, very much better, right? But I think one of the things that I do see positively for Eli Lilly is that you can see that there's a bit of a consolidative look taking place, but you are taking that in terms of a kind of symmetrical triangle, right? And it's after a very nice period of higher highs, higher lows, right? So this could be a setup for further continuation pattern, right? Further upside. Yeah, so I think that's one of the things I'm keeping an eye out for. But again, right, this asymmetrical triangle pattern, the reason why I'm still in a wait and see mode is because it can break in either direction. So you can see that RSI, right, if it's kind of also consolidating the similar pattern. If it does break out to the lower bound, right, it could signal a move below 40, and that move below 40 could come alongside kind of breaking below the lower bound, right? And I think that does signal that we might test supports again around this kind of $720 region, right? Is the prior swing lows, effectively. Yeah, but I think if we do break out to the upside, I think the continuation of upside remains very, very strong. And I think LLE can really take advantage of that.
Okay, thank you for that. Let me
No,
just...
please.
So I think the next one is probably the telco and tech hardware. I think Qualcomm and Cisco system are one of those that could benefit from Trump's emphasis on domestic technology independence and protection against Chinese tech firms like Huawei. I think on the downside, I think companies like Apple, which has high exposure in China, could probably see some downside. I mean, at least in the initial stage, there could be a lot of uncertainties in terms of how the Trump administration will act against an American company. But having said that, we've seen during Trump's first, I think during 2016 to 2020, I think Apple actually got quite a bit of exemption from some of the tariffs that the US actually imposed on. All right, I think just want to jump into the private prison and immigration related companies. I think I heard this from you, Jeddave, the other day when you talk about the prison thingy. I think Core Civic and Geo Group are the two leaders in this area, right? So
Yes.
probably see government increase in government contracts if Trump were to resume tougher immigration policies. So can you show the technicals for the two?
I think the one that I'll show a bit more is definitely on the geo group, lah, right? Because it illustrates the Trump trade very, very well, lah, right? Because we're talking a little bit about how, there's a recent resumption in the Trump trade, especially towards the start of October. And you can really see that play out in the chart of the geo group, lah, right? One of the clearest charts in terms of seeing the Trump trade, lah, right? You can see that there's a very clear supportive base kind of being formed around this near $12.50 level, right? And from there itself, you can see that once it started bottoming around this September period, and from there itself, it's been a pretty nice strong rally, right, towards the upside. And a lot of that is again, right, my own take, right, is very, very much on towards the fact that it's a Trump trade, right. There's a lot of expectations of how it's going to do a bit better. So I think this is all in the build up to earnings. I don't know how earnings is going to play out. This is not one of the names that I follow very closely for earnings. Let me be honest, right? But yeah, I think this is going to be something that I think if you're talking about Trump trade, right, I think this is one of the names that will then definitely benefit quite a bit.
Yeah.
The levels I'm looking at for something like Geo Group, right? I think given the recent breakout above this kind of $14 resistance, I would say that that's the first point of support I'm going to be looking at, right? If it does show any resistance and a bit of a pullback. I think resistance wise, right, the first bound definitely will come near current levels, right? Because you can see that it's kind of like a previous swing high around this region. You can see that there's a bit of a consolidative look taking place previously around here. So I think current levels would actually present a bit of a resistance for me, right? And I think that if we can break above and move above current levels, right, there's a potential of testing towards this kind of next level of swing highs, right, which is going to be near this $18 level. If there's going to be some kind of resistance coming in, right, I think I do see some downside towards the $14 region. Yeah.
So I think it's probably best to just wait for it to see some pullback, right? I'm guessing there should be some volatility just prior to the election. And then, of course, if Trump were to win, then we should see a spike up in this counter.
Yes, definitely. And I think another thing that's supportive of a bit more of a pullback narrative, right? It's also that you can see that there's a bit of a overbought region now in terms of RSI. So I think these are some of the things that, when I look at, I'm not too comfortable with entering, especially at current levels. So even if it does break out towards the upside, I think I'll hold back a little bit more. I want to see whether, after it breaks out, it does come back and test this as a support. And I think that also would kind of stabilize the RSI kind of range, right? And if once that kind of takes place, if there's no further pullback, then I'll enter. But if not, I think I will look towards the $14 level, right, for a nice entry point.
Okay. All right. I think aside from that, I think construction and real estate could also benefit from that because of Trump's focus on deregulation and infrastructure project. So this should benefit some of the real estate developer like D.R. Horton and Lena Corp. Right. I don't think I wanted to go into the technical for the two or go into some of the stocks that could benefit if Kamala Harris were to win. So renewable energy. Now I wanted to talk about I'll go talk about that later lah. We'll just emphasize on renewable energy first. So we can see there are few. I probably want to focus on First Solar and Next Era. So Next Era is actually a major player in renewable energy, particularly in the wind and solar projects, which fits well with the climate-focused policy. Our First Solar is actually the US-based solar panel manufacturer. So if they were to be continued focus on renewable energy, especially on solar, I do think these two players will benefit from it. Brookfield Renewable Partners are also involved in renewable power assets like hydroelectric, wind, and solar energy projects. So they should also benefit from it. Can you show the Next Era and First Solar?
Sure. Okay. Next Terra wise, you can see that there's a bit of a nice base that is forming now, right? So it's okay. I think it was actually one of the picks that I actually had for a transporter pick a while back, right? And I actually already hit my target price, so I'm not really looking much at it already. But generally speaking, you can also see that. Sorry?
What's the target price again that time? Do you remember?
Wow, it escapes me. I'm so sorry. Yeah, it escapes me. I have to go and search it out. But yeah, I think if I remember correctly, I did actually talk about an entry point, if I'm not wrong, actually around this near $75 region. I think my first target price will probably be around this near $80 region. And I think the next target price will be around this $84 region. If I remember correctly, I think that would be some of my levels because I was looking at kind of the resistance around this point. Yeah. But anyway, so I think one of the reasons why I think to me now, right, Nextera continues to keep its look of uptrend now, right? You can see that there's kind of a clear pattern of higher highs, high lows being from, I think, from your October lows, right? Even this very, very basic trend line that is not even really adjusted, you can really see the general uptrend now, right? I think the outside of that itself, you can also see that it's consolidating around a kind of prior support prior resistance level. There I say not support, sorry. So why I say that is that you can see that it's kind of tested towards this 15 moving average. It tested this price swing highs, right? And then after that, it continued with a bit of upside from there. So if it does move above this $85 region, right, I think definitely does set up the continue further upside towards the next bound, right, which is going to be nearer and nearer towards the $88 level. Yeah. So I think that's one of the things that I would say that it's not too bad, right? But I think there's actually, I think in the news, I can't remember the name though. Billy, do you remember that there's this firm that's actually providing energy for recently providing energy for your Microsoft and Alphabet and so on.
Yeah,
It's more on it was a renewable name also.
I can't remember. Is it a nuclear company or what?
Yeah, they are nuclear, it's a nuclear company.
I actually didn't put the nuclear because if you're looking at Kamala Harris, I don't think there is a lot of certainty on that front. But yeah, I think if you talk about nuclear, then that's probably another area that investors can look at with the I think the data centers and all that is requiring it. But I think the name I can't remember. I'll
I
take a
think it's, if I'm
name.
not wrong, right? Sorry if you don't mind me coming in with that, right? If I'm not wrong, it actually is Constellation Energy, right? I think, do correct me if I'm wrong.
Yes,
I
that's
think it's
correct.
Constellation Energy. Yeah. So Constellation Energy, I think if you're looking at that, right, I think I think it's this one because you can see the very, very clear breakout from I think the Microsoft news, right? That the resumption of the 3 Mile Island project. Yeah. So you can see that generally speaking, I think there is a very, very nice upside to be had with Constellation Energy just because the trend is very, very strong. And I think there is beginning to be a lot more interest in terms of your solar energy, especially the needs for artificial intelligence, the data and the power needs are very, very heavy, right? So I think companies are looking for alternative ways to actually power, and one of the most reliable forms of renewable energy is actually at the moment going to be nuclear, yeah. So I think my own take is that whether it be Trump or Harris, right, I think actually nuclear is going to be something that's going to be pretty important for renewable energy kind of trade, because I think it's the most reliable one for now.
Yep.
But I think let's see, I do agree with you, Billy, that it's not a guarantee because Kamala is probably going to err on the side of caution. She doesn't really like the idea of nuclear very much, right? It's not the nicest thing to hear, nuclear energy, right?
I think what I'm trying to say is that I don't I
Mm.
agree with you. Whether whichever party become president, it probably doesn't make any difference. And I think instead of looking
Yeah.
at your company, if you're not very sure how to invest in nuclear, maybe another way is to probably just look into ETF. I think there are a few that is in the market that you can actually look into, which actually
Yeah.
help you to avoid the need to track, because I think it's a bit too niche for even for myself. I don't think I track into some of the details too closely, like the
Ah.
cost of running it and stuff like that. I don't look into it too closely myself. Yeah.
It's a
Okay.
good point. It's a good point indeed. Sometimes it's difficult to track these sort of companies.
Yeah, I think it's quite technical, but to say, right?
Yeah, for
Okay, I think
sure.
this one is probably EV, and I think I want to mention this. I think for Tesla, I think whether it's Trump or Kamala Harris, I think Tesla is probably gonna gain from some of the policies that will support EV adoption and infrastructure. Of course, I think the key difference here is that I think if the Trump administrations were to win, it's probably gonna be more protective towards US companies, US manufacturers like Tesla, and this will probably benefit Tesla in terms of allowing exports from allowing imports from the likes of BYD and the rest of the EV players in China. So maybe in terms of technical, let's just look at Tesla. I think they're going to report earnings this week, right? Today.
Yeah, actually Tesla is going to report earnings in the upcoming, I think it's on, if I'm not remember correctly, it's on Wednesday post-market. Yeah.
Okay.
So yeah, let's quickly flip to Tesla, I think. Yeah. I think general expectations of Tesla, right? I think just to quickly start off, right? Expectation of Tesla actually is more on the positive side. So they are expecting earnings beat and but revenue, I think they are still expecting a revenue miss, right? In a sense that there's no, sorry, what am I saying? Revenue miss. They are expecting revenue to have a decline, right? But your earnings to actually show a bit of a beat in terms of a year-on-year gain growth, right? I think that's from what I checked the last round, if I'm not wrong. Yeah. So I think generally speaking, where we see Tesla kind of trade out, right, is that you can see a lot of weakness from their recent events, right? So two of the things that happened in the past 2 months or so is that Tesla actually had their delivery numbers, right? And I think that's one of the things that actually disappointed investors because investors were expecting a very, very strong beat, Tesla did beat the expectation, but not enough, right, to actually have to actually ease the minds and worries of the investors. So for Tesla to actually hit their annual delivery target, right, they actually are going to have a record-breaking fourth quarter in terms of their deliveries and things like that. And so I think a lot of the focus of the commentaries in the earnings period, right, is really going to come around that line of thought, right? Is Tesla going to be able to meet this kind of lofty goals that they're setting for themselves, right, in the upcoming earnings report? That'll be one of the things, right? But you can really see in the technical side, right? It is really just a wait and see kind of period ahead of the earnings, right? And I do expect this kind of continue for today. Last day before earnings, I think, which is going to be on Wednesday post-market, right? The next 2 days, I think, it's still going to be a bit choppy. We're going to be near these current levels, but it is setting up for pretty big breakout, I would say, in either direction. Because if Tesla does outperform earnings, or that if they do come up with their forecasts that are actually above expectations, right, I think we could very conceivably just see a gap higher towards this kind of like major resistance level. And I think that could potentially point us towards breaking out from this major resistance level, potentially higher, right? But if we do see a gap lower, right, I think the 200-day moving average is the first point I'm going to be looking at. And I think if we do break that, I think the next point, of course, will be nearer towards this 185 region. Yeah. So that's not one of the stocks that I would say very heavy volatility expected. Even though earnings are expected to do pretty well, I think there's the commentary that investors are going to have to keep a very close eye on. Yeah.
It's the kind of company that you wanted to invest in if you believe in the founder. So if you really believe in Elon Musk, you probably want to buy it, So because I think their events, the V Robot events, is actually, to be honest, the event is super cool. The way that they introduce their robots, the Cybercab and the 20 passengers robo van. But I think despite of all the cool factor, I think there's a lot of anxiety, especially involving in terms of the production timeline that they had set on 2026. I think Elon Musk has a track record of over-promising. And so that worry, if it's 2026, so what's they gonna do between then and now? I think price that they have is quite affordable at 30,000 for the Cybercab that they talk about. So I think that's quite interesting. But I think a lot of uncertainties on that front still. So yeah.
If I were to add a little bit more on that, right, you are exactly right to say all these things. And I think one further wrinkle that we are talking about for Tesla, right, is that they are talking about potentially having a cheaper vehicle, right? And that has been in the minds of a lot of investors for the longest time now, right? And so I think that cheaper vehicle talk is also going to be something that I think earnings is going to be pretty looking out for, right? Because when that cheaper vehicle comes in, then you can talk about hitting those lofty delivery targets a little bit more, because Tesla is still positioned very much as a premium vehicle, right? So I think that will be something I think investors will be keeping a very close eye on as well.
Okay, all right. Let me just share the screen. I think this is the last one. I think if Kamala Harris were to win, I think it's going to continue very much on Biden's administration policy. So I think the semiconductor and the tech industries, I think the key beneficiary is probably going to be Intel. I think if you look at the chip side, Intel is probably one of the key names that actually get most of the benefits. But of course, we all know Intel struggles in terms of the tech competition. So can we look at the technicals?
Sure thing. So
Personally,
Intel-wise itself.
before you go to the charts, personally, I believe that either, whether it's Trump or it's Kamala Harris, I do think that tech companies that have manufacturing in the States will probably benefit, from this. So yeah, you just take a look.
Yeah, okay. So Intel-wise itself, you can really see that it had a very nice breakout, right? And actually, if you are following this is not a place for me to promote anything, right? Or at least we know that this is not a place for me to promote any technical buys or things like that. So I'm not trying to say this is a technical buy. But if you did follow my reports, right? Actually, I did launch a technical buy, I think around this 23rd or 24th September kind of period, right? And this is still kind of in a holding pattern. That means it has not clearly broken up in upside or downside as of yet, right? After the point that I wrote my report on it. So I think for now itself, I think if you're talking about the technicals wise, I do think I still lean towards the fact that on the buy side, right? At least for the short-term basis. Yes, there's a lot of major longer-term weakness, but I think on the shorter term front, right, you can see that there's a bit of a bullish divergence that came in here that actually signaled that upside firstly, right? And secondly is that you're still holding count of the breakout levels as support for now. And I think that consolidative look at holding these breakout levels is pretty important. If we can continue to hold that, I think into the earnings, and of course, then earnings shake out positively, that will definitely lead to a bit of a breakout, right? But if there's a negative break in earnings, right, I think that definitely could lead to some downside. I think the other name that's actually going to report earnings, I think that we didn't mention in the slides, right, is actually, I think, reporting earnings, if I'm not wrong, actually later today after the market closes. It's actually Texas, Texas Instruments, if I'm not wrong, So they are actually going to report earnings after the market tonight, right? And I think generally the expectations tend to be a bit positive for names like that, Texas, right? But I think this will be one of the things that does shape the way the market moves in terms of your semiconductors, at least for the next few days, right? Or at least on the day itself after earnings, Wednesday, there could be a bit of a shakeout. If Texas does not do as well as expected, right? And I think commentary on the artificial intelligence chips is not as positive or strong as expected. I think that's going to weigh a bit on something like Texas Instruments, right? But I think if there's some positive commentary and things like that, it definitely could push the market higher. I think definitely if you're talking about the Harris trade, right, I do agree very much with what Billy has said, right, which is that there is a track record, right, that Trump prefers more on the things like tax cuts and things like that, and Kamala Harris definitely prefers more of the the grants and so on and so forth. So I think if you're really wanting to trade on that kind of traction, my focus will be actually names that actually have really shown that they are going to receive a lot of these grants, right? And I think Intel is one of the greatest names in that regard, right? How many times have they received this grant already?
Yep.
Whether their fundamentals can actually catch up to it, that's going to be a very big question mark. But definitely the grants will help with the initial profitabilities, and let's see how they do from here. Yeah.
I think before we end, I also wanted to talk about. I think I didn't put this in the slide because it's related to Bitcoin, so I didn't want to over speculate it. I think if you look at Bitcoin and stocks that are related to Bitcoin, I think we also write an article on that. So basically, Trump is probably more pro the cryptocurrency market. So if Trump were to win, it's probably gonna be a boost for the crypto market as well, lah. And I also wanted to emphasize one thing because I think we talk about that in our title. This is basically something that we don't talk a lot. So what about US Fed interest rate cut? So I think if you look at a lot of the consensus are still expecting there to be rate cuts, I think, but probably differ in terms of paces. I think probably not as fast as what was previously expected because of the stronger economy in the United States. But I do agree with a lot of the commentary that mentioned that if inflation were to slow down a bit, I think there is a lot of reasons for the Fed to cut rate. And I think this will benefit a lot of the tech sectors, especially the likes of your big tech sectors, the likes of NVIDIA, Microsoft, and Apple. Just wanted to highlight this. I think, Jeddave, do you remember when we first have this market talks, I think end of last year, something like that, in December. Back then, there were a lot of questions on whether the tech companies can run, and there were some pullbacks and stuff like that. And we did mention the structural growth for these tech companies remain intact. So I do think same for now. I think there are a lot of companies that talk about AI. So of course, the key beneficiaries, we know the leading players like NVIDIA, Microsoft. So I do think that some of these leaders will continue to record good earnings that probably meet and beat expectations. So I do think that we should still see a lot of growth on that front. So yeah, do you want to show what are the charts on there?
Yeah, so I think just to quickly, since you shared a little bit about it, right, I'm just going to put up this chart, right? I think this is something that I keep going back towards. Why I keep going back towards is because this is something that I update every time there's an FOMC meeting, right? And this was the first rate cut. I think this was in July. I think the July projections were actually so it was quite blunt, right? But you can see that it really steepened out a lot more in the September Fed rate interest rate decision now, right? And I think you can also see that essentially your CPI, right, or the US preferred gauge, right, your PCE price index, right, actually has continued to show very, very clear sign of declining, right? So while there is a bit of a pickup in inflation in terms of your core CPI and CPI that was reported, I think, last week, right? Your PPI actually came in slightly below expectations, and I think the main one that the investors are still really, really waiting out for is going to be this PCE price index, right? Again, because this is the Fed's main preferred inflation gauge, right? And if this comes in within the realm of expectations, right, I think it signals that inflation is still within good control, and I think there could be some potential for the rate cuts path to continue to remain this steep, right? But in all likelihood, right, I think the rate cut path is going to be less steep than what is previously projected, right? And there's going to be a bit of a shift in terms of a bit more of a hawkish shift. Does not mean that we know that we won't see a rate cut. I think as what Billy says, I think likelihood we will still see a rate cut. And I think what the market is still projecting for now, right? When you look at something like there's this target rate possibilities called I think it's from CME Group, called the CME Fed rate possibility or something like that. If effectively, right, this kind of interview or this kind of the data for this is actually pointing towards about 88% probability of a Fed rate cut, and it's about a 25 basis point rate cut, right? And of course, there's only about 10% that says, the rates will be held steady. So yeah, they are no longer pricing in any larger rate cut, but you can also see that the rate cut is very, very much heavily expected, right? Given that inflation is still largely within the realm of expectations, and your economy is still doing better than expected, I think there's no room for a jumbo rate cut for now, or at least there's no need for that, right? I think the Fed is very worried about walking this tightrope about inflation and the economy. You tip the economy too fast, right? And you help the economy too fast, right? Inflation will likely pick up as well. And I think that's something the Fed doesn't want, right? So I think, yeah, that will be my main take on this.
All right. I think we've taken quite a bit of your time, so we hope that this webinar has helped you guys to take advantage of some of the potential changes with the potential, upcoming result for the US presidential election. If you have any questions, feel free to write into us and let us know. All right. Do remember to follow our technical updates and analysis every morning. I think that Jeddave will send over, right?
Yes,
Sorry,
yes.
every
Every
evening.
evening.
Oh,
Yes,
the-
every evening.
Okay, thank you. Bye.
Thanks,
Thank you.
everyone.